Hi, everyone. This is Jason Burek of Wall Street from Main Street. Welcome back to another Wall Street from Main Street podcast interview. Today's special guest is a returning guest. He's former Wall Street investment analyst and marketing director for precious metal dealer Miles Franklin. Andy Hoffman, thank you for joining me again.
Well, thanks for having me again. It's been a while.
Now, Andy, there's so much going on in terms of global events, and, this asset price inflation with the stock market bubble, the real estate bubble, the bond market bubble, it all seems to be the asset prices are finally in correction. Do you think every central bank is trapped?
Well, they've been trapped from the beginning. Again, when you're in a Ponzi scheme, all you can do is make things worse until eventually it falls apart. And, by definition, which is what the fiat currency regime is, it is a Ponzi scheme because you must keep increasing the size of the program to maintain it, and you must maintain confidence in the program while you're increasing the size. And, of course, we're now losing, the central banks are losing the credibility and confidence of the markets. At the same time, the size is bigger than anything that we've ever seen in history. Again, all you have to do is look what happened with the Bank of Japan last week when they lowered rates to negative territory and the Nikkei proceeded to plunge 20%. Or when Janet Yellen went on Capitol Hill on Wednesday, which is typically an event where the market manipulators get whatever they want, and gold promptly surged $60 the next day, and the market fell several hundred points. So again, they're losing control of their credibility left and right, and it's getting to the point now where they're starting to lose control.
Now, we're seeing in the bank stocks, the charts look just absolutely ugly. Do you think the stock charts for the banks are signaling that something worse than 2008 is on the horizon or happening right now?
Absolutely. And when you consider that the stock markets have never been more supported by manipulative forces, and watching them fall this fast shows you that even, it's true actually that you cannot maintain manipulation forever. And particularly in the bank stocks, which are showing the impact of the negative impact of the negative interest rates and the QE and the falling apart economy all at once. In Europe, they're really falling apart to the point where it's looking like a 2008 style collapse could happen any day now. And around the world, it's not much better.
Now, also to add to the bank's problems, we have this shale oil energy debt and other mining debt, and I don't think the banks have started to write this off really yet. So that probably is what the market's anticipating, that the reserves for these not precious metal, the oil and energy company and the mining companies, they're going to start writing down reserves. They're going to start taking losses. We haven't seen a large amount of bankruptcies yet. So do you think that's also what the market's starting to price in?
Yeah, well, they're pricing in the falling economy, the write-offs, the layoffs, the lack of central bank credibility, et cetera, et cetera. And like you said, look, this is year-end. At the end of the year is when all companies do operational reviews. They're forced by their accountants to do write-offs. Then the layoffs come right after. We just saw the Challenger job layoff number for January was the highest since January 2009, which shows you what's going to be coming in the next month or two. And as for oil and gas and mining companies and all kinds of other companies, you're going to see probably historic write-downs in the next few weeks. That's why so many are so late. Remember, when you report end of the year, you have 90 days to report, as opposed to for a regular quarter, I think you have 45 days. And you're going to see a lot of companies go right to the very end because they're sharpening their pencils and writing everything down. And, when they do that, there's going to be layoffs. There's going to be debt covenant violations. There's going to be defaults in the energy sector in particular. And, we've heard that the Dallas Fed appears to have ordered banks not to write down their energy assets, but they're going to have to. And if they don't, everyone's going to see right through it. So, of course, they have to be written down in historic form. So I think it's going to be an epiphany for the entire market when they see just how much is written down and just how many layoffs are going to be announced. It's my firm prediction that no matter how many seasonal adjustments or double seasonal adjustments they add, even the Fed's favorite pet number, the NFP report, is going to have to put out a negative number at some point soon.
We're also seeing an enormous amount of sovereign wealth funds, whether that's the Saudi Arabia or Norway. They're starting to dump their equity. So that's putting additional pressure on, these higher stock market prices. That's, blowing up the support levels. And I think a lot of that money the people who are in the trend traders who are following, hoping that the markets would continue to go high, they've started to realize that there's not the buy the dip mindset is dying.
Right, and buy the dip mindset really has nothing to do more than the central banks manipulate markets, and the PPT comes in and buys the Dow every day, and they have some algorithms set up so that whenever the yen falls against the dollar, markets go up, and they're used to that stuff. And just like the traders are used to, shorting naked shorting paper gold at 2:15 a.m. or 10 a.m. They're just what has been working, what the manipulators have been doing so successfully so long, is not working so much anymore. And that's why the buy the dip mentality is going away. It's just not working anymore, and as it shouldn't, because when you have an historically overvalued market and a collapsing economy, and the central bankers are losing credibility, even as they continue to pump the money supply, the buy the dip turns into a sell the rip.
Yeah, I think the more money that leaves the regular stock market and these other normal asset markets, the more money that's going to go into precious metals. But do you think that the middle class in the United States and Main Street, do you think they're going to continue to get screwed in new and different ways by politicians and the people in power that can change the rules?
Yes, I mean that's the whole point. The whole point of getting out of the system as much as possible is because they will do these things. In fact, my article today, I've written a series of articles over the past, it's almost 4 years now, called NIRP versus gold, meaning negative interest rates versus gold. It's kind of highlighting all of the issues, the negative issues with negative interest rates and why they're so positive for gold. And the one today, which was NIRP versus gold part 6, was something called like the horrific endgame of a cashless society. And this is a perfect example of, you say, how will they screw the people? And it hadn't really occurred to me, because I get asked a lot about this cashless society, why it's so bad. Because, it's already a pretty cashless society as it is, and I recognize that they could track transactions if it's all cashless. But, hey, most of what I do anyways is with credit cards and wires, so it's not really a big deal. But then when I saw that negative interest rates is spreading like wildfire around the world and capital controls, and more importantly, what really catalyzed it was, there was an article on Zero Hedge that said a disturbing thing was found in a Morgan Stanley presentation. And in it, it showed that this analyst at Morgan Stanley, who had just been at Davos, he quoted a, quote, high-ranking global politician who said, we need to introduce a cashless society so we can take interest rates far more negative than negative 1%. And at the same time, J.P. Morgan, their analysts, put out a report saying they predict 4.5% negative interest rates in Europe and 3.5% in Japan, 2.5% in the UK, and 1.5% in the United States. And they said, oh my God, now I understand what they're going to do. They want to make it cashless so that everyone has to put their money in the bank so that they can start confiscating it with negative interest rates. I mean, that's what's going on. That's a perfect example of what it is that they're going to do. In fact, this morning I just read that the European Union Parliament or Commission Parliament voted to get rid of the 500 euro note, to completely get rid of it, which sounds like nothing until you realize it's something like 30% of all the cash in circulation in Europe are 500 euro notes. And that's how they started. I mean, it's a mosaic that's being painted here of how they're going to confiscate your wealth. So that's just one thing they're going to do. But the point is, you have to get out of the system and protect yourself as soon as possible, because they will do anything and everything to stay in power and to do so at your expense.
It looks like the Keynesians are running out of schemes. They've tried the quantitative easing programs, they've tried the stimulus packages, they've tried the currency swaps, and yet, the asset prices are starting to fall. And, the banks cannot be propped up forever. We see banking problems all over the world. And, we're here, I guess it looks like the Keynesian endgame, where they're trying to euthanize the rentier. Anyone who has any savings left, they're trying to go after in any and all places, and they're trying to force people to spend the money any way they can or tax it if they won't spend it. So it looks like, that type of savings glut that Marx and Keynes talked about, how they can't, it won't allow them to raise wages, and government can't get taxes and things like that.
Yeah, I mean, look, anything and everything that people can do, governments can do, to stay in power and confiscate wealth, they're going to do. And it's just crazy the pace, like I said, I had this epiphany. The pace at which it came from cash society, no big deal, to holy cow, they're about to take everything from us, is frightening. And that's a corollary for the frightening pace of how fast everything is falling apart. We're taping this on Monday here, and they waited to this holiday paper thin trading session. They smashed gold. They pushed stock futures back up. They try to act like try to restore perception of that things are okay. But the fact is, nothing's changed. In fact, the news that's been out in the last 24, 48 hours has been horrible. So to me, anytime you get this kind of situation, this kind of respite, these eyes of the storm are much smaller than before. You're going to see a frightening return to reality in the coming days, and as it goes on, everyone's going to be shocked at the crazy things that governments propose and the crazy ways that people are going to be hurt by it. And frankly, I'm getting more scared with every passing day as a result, because I truly believe, as I've been saying a while, I don't think there's a chance we get through 2016 without the next 2008 occurring, which of course will be far worse than 2008 because there's going to be no backstop this time.
Do you think all these current events, some of the ones that you mentioned earlier in this interview, do you think those are helping start the secular precious metals bull market again?
Yes. Well, look, the precious metal bull market started almost 2 years ago on a worldwide basis. I mean, the average currency around the world, if I had to guess, just doing the math, because I did a chart the other day, I'd say the average currency around the world is within 10% of its all-time high, and many, including all the BRICS, except for China, which is pegged, Brazil, South Africa, Russia, and not quite yet India, but close. They're at all-time highs already, as are many currencies, gold in many currencies around the world. So the bull market in precious metals, particularly gold, has been raging on for the past 12 to 18 months. It just hasn't been here because this is the epicenter of manipulation. And even here, the price is starting to move up. Again, the pace of how fast things are falling apart and how the fundamentals of precious metals are accelerating is like nothing I've seen. It's kind of, that hyperbolic movement, the change in the trajectory of the fundamentals is like nothing I've ever seen in the 14 years I've been in precious metals, and frankly in the 25 years I've been in financial markets. So I think with each passing day, you're just going to see more and more headlines that push people into precious metals and push people out of paper markets.
Yeah, I agree. I think we're starting to see evidence of this with more mainstream Wall Street people, not Austrian school, not libertarian types, not gold or silver bugs like you and me, but people like Mark Cuban, people like Stanley Druckenmiller. These guys are starting to get gold exposure, whereas in the past, they would have poo-pooed it, they would have made fun of it, they would have went on CNBC or Bloomberg like Barry Ritholtz did and said, anyone who likes gold is a gold bug, I only buy it for a short amount of time, I made a profit, I sell it, I don't care about it, blah, blah, blah. I think a lot of those types, they've made their money off the reflation since 2009, and they know now that things are starting to fall apart, and now they're looking to go to, I guess, either cash and then also to metal.
Right. Look, Westerners have been brainwashed, particularly Americans, by having the reserve currency for all these years, where you didn't need gold. Around the world, they have not only a history of it, but they have a recent history of why you need gold. I mean, I got an email from a guy in Japan today. He said, "You literally can't buy silver here. And can we buy gold from you because the premiums are so exorbitant over there that it's not worth even buying?" So in a lot of places around the world where you see prices surging, you can't get it. Whereas Westerners are so brainwashed to believe that gold is a barbarous relic, they don't really have much interest in it unless it's going up because it's an investment. And, we certainly saw that here at Miles Franklin in 2011 when we had, hundreds and hundreds of small investors calling, trying to get in on the action as it was going up. Whereas when it goes down, it's really just, the hard money that comes in, the real believers. But I think as the world starts to really fall apart as it's doing, you're going to finally see Westerners, brainwashed Westerners, whether they're in Europe or here, start to buy out of fear as well, not just greed. So, and this is a time where you have already record demand. You have production has clearly peaked for both metals, and based on all the covert dishoarding and price suppression over the years, we probably have pound for pound the lowest amount of inventories probably in global history.
I want to ask you about the Shanghai Gold Exchange withdrawal data. Coos Jansen's reported, I think a month and a half ago, that they were going to stop reporting this. Why do you think China would stop reporting this if they decided to not report the numbers anymore?
Right. Well, first he said they did, and then he said, well, they've still put out the data, even though they said they were getting rid of it. So we'll see if they actually get rid of it. And of course, anything that comes out of China, you have to take with a grain of salt. But it's the same thing with the COMEX. They say that the data may not be true, and they're criminals. But the last thing they want to show is that they're running out of inventory, which is what they're doing. So clearly, the mosaic that's being built there is that clearly the inventories are going down. And frankly, they have to be. There's no way the price could have not gone up with record demand unless they were just hoarding the inventories. And the same goes with China. I mean, they're showing record demand so much, in fact, that it's in China alone, the withdrawals at the Shanghai Exchange last year were almost as much as the entire global production. And for silver, I think the imports into India, and that doesn't even include the black market, were almost as much as global silver production. So yes, the amount of physical buying is incredible. It's clearly depleting inventories rapidly. And why would the Chinese stop publishing it? Well, because they want to buy whatever gold they can before it goes no offer, which it will. If they were to keep showing data like that, what it really is, they're going to trigger a run on the metal, and they don't want a run on the metal until they have all the metal they can get.
Yeah, that's a good point. And we're going to, if the metals price didn't start to rise in dollar terms, we're going to have supply problems on the supply side from a lot of the primary gold and silver miners that were in the United States, that were one of the few countries, like you said, where the gold and silver price hadn't started to rise that much yet, and it's finally started to risen. So some of these miners, that were in financial trouble, now with the oil's price still being cheap, and cheaper currencies relative to the dollar, some of these miners may actually have some profits coming in the next couple quarters, whereas in the past they were risking bankruptcy.
Well, let's put it in perspective. Gold was essentially 1,100, now it's 1,200. It's not that big of a difference. And while oil is a significant part of operating costs, a variable cost, the biggest costs that have gone up have nothing to do with commodity prices. It has to do with permitting, with more difficult technology, with taxation, all kinds of things that have only gone up in time. So net, the cost of mining certainly hasn't gone down because it's become more scarce of a commodity in general. Same with oil. They have to do far more difficult things in difficult places. They don't have the personnel anymore to do it because they've been driven out of the industry by a lack of profit. So I don't really think net the cost of mining has changed a heck of a lot, other than the variable cost of some of the world's high cost mines. So like we said before, you're going to still see dramatic changes, dramatic write-offs in the coming weeks. And more importantly, because of the suppression for so long, there's been no discoveries for 15, 20 years. I mean, nothing. So there's going to be no production to replace the depletion. And you've also had a lot of high grading of production because of the low prices. So in recent years, you've seen a lot of the cheaper deposits be mined simply because they were the only profitable parts of the development. So now that that's being depleted, you're going to see, the costs are going to go up because they're going to have less or more expensive ore to get out of the ground. So there's no, the miners at these prices, whether it's 1,100 or 1,200, are trapped by terrible business conditions. They need something dramatically higher than these prices to make real profits that are going to help them expand and explore and bring people back. And they're going to need something, look, the head of Goldfields, what was it, 3 or 4 years ago, said the industry needs, what did he say, 1,700 or 1,600 for the industry to survive, meaning to be able to replace its reserves and stay viable over time. And here we've been under 1,100, now we're at 1,200 for years now. So I think the production has guaranteed to have peaked in gold, certainly even more so in silver, because 2/3 of all the silver is a byproduct of copper, lead, and zinc mines, which are way oversupplied and are going to have to be shut down en masse in the coming years.
Yeah, and every decade, the grades for gold mines and grades for silver mines, they fall dramatically. So if you went back, a couple decades to the 70s or 80s and looked at the average head grades for a mine being brought into production, they were a lot higher than the current grades today. So they just keep falling. So what that means for our listeners out there who don't understand mining is you have to move a bunch of uneconomic rock to get to the economic ore. So these are natural geological conditions that are not going to improve. So even if the cost with cheaper energy costs have helped in that part, there's still geological problems in terms of getting economic ore out of the ground, even with cheaper oil or diesel.
And that's particularly true for silver. Remember, there's a reason why silver, the silver-gold ratio or gold-silver ratio was pegged for centuries at 15-1 when governments were pegging them. It was because that was the ratio that they came out of the ground, 15 ounces silver for 1 ounce of gold. The thing is, that ratio is all the way down in reality to 9-1 now, because silver in particular, a lot of it is closer to the surface, so it's been easier to find, and it's been mined already. So in silver's particular case, it's permanently going to be in a greater shortage than it's been before. So really, it doesn't matter what the oil price is.
Yeah, and to add to your point there again, I was looking at True Gold Mining's presentation. They're starting mining in March. They're one of only 4, according to their presentation, they're one of only 4 new gold miners that's going to go into production in the next 6 months. So there's a lot of gold mining production where reserves are not being replaced, production's not being replaced. So depletion is the enemy. A lot of people who haven't invested in resource stocks or normal Wall Street investors or traders, they don't understand depletion problems and natural limits to the earth and resources and things like that, and how there has to be a higher price to replace reserves.
Absolutely. Look, if gold was $2,000 an ounce today, there would be, Wall Street would be throwing money at these guys, and they would have the money to search for the difficult, expensive gold. But right now, they barely have enough to stay in business and invest at all. So it's going to take. I think we're potentially permanently in a falling or flat production scenario. I think we just had our Miles Franklin Silver 2016 Silver Update webinar, and basically we were saying the only way silver production will ever rise again is with a dramatic increase in the price of silver. And of course, if you have that, increases in supply are not going to be an issue. So I think we're going to be in a permanent supply deficit for years to come. Permanent is for all intents and purposes, and probably for gold as well.
Yeah, for silver, we need to see at least $25 to $30 an ounce, and the price has to stay there before new large silver mines would even think about financing a good amount of large silver mines. Otherwise, most of those are not going to get financed. And for gold, I think we're going to need to see gold over like $1,350, $1,400. It's going to have to stay there before capital can be raised to finance a lot of these large gold mines.
And remember, that's the other thing about it's not even just about mining stocks; it's about the mining industry in general. When the price breaks, pick a number, $1,400, $1,500, to me that's a signal that the cartel has been either beaten completely or severely wounded. And the only way that that's going to happen with all this control that's over them is if they, the powers that be lose control and gold starts to become remonetized in the view of the world, from individuals to governments. At which point governments start to, think of gold as a national security asset, and you're going to see the windfall profit taxes, and you're going to see the confiscations and nationalizations. So even if you have a dramatically higher price, it most likely is going to be tied in with draconian government actions that are going to make it difficult for you or mining companies to benefit from it. I'm not saying it can't happen, but I'm saying the odds are very much loaded against you if you're going to, because it's, there's a difference between today's suppressed world and a world where the powers that be lose control.
Yeah, I agree. Our listeners are very familiar with, I wrote an article about the 3 new rules of investing in the new normal now, and the rule number 1 is the governments are going to keep changing the rules to benefit them and the banks, special interests, large corporations, hedge funds, etc. And one of those rules is, you're looking at right now, Mexico has had their oil revenues fall, and some of these Mexican miners are getting notices that they didn't pay enough taxes, even though I'm sure they were compliant with the law. And Silver Wheaton was also audited too, and they were fully compliant with all the legal laws too, but they're one of the few resource companies that's still making money in this environment, so the Canadian government's going after them for taxes.
Well, that's why it's so comical. Like Mexico is, the largest silver producer in the world, and by the way, their silver production was down in both 2014 and 2015, and they're the largest producer in the world. But the fact that people, including analysts in our community, consider Mexico the most favorable country to produce metal in, I'm going, really? Is it that bad? Are we that conditioned by the horrors of around the world to believe that Mexico, which is one of the most horrible places for doing business is the best place, and that we should count on that being a good place for miners. And like you said, they come in and they're just dramatically jacking up the rates. And what happens when they have social unrest or oil stays down at under $25 or $30 for a long period of time, and they too want a bigger share of their gold mines, especially if the price goes up and they're worth more. I mean, if Mexico is the best jurisdiction for mining, then I am going to dramatically reduce my outlook for production over the years, because Mexico is going to be a very bad place. And by the way, Mexico is another one of those countries where the price of gold is pretty close to its all-time high. I think it's about 10% away. So trust me, with oil collapsing to multi-decade lows and gold and the Mexican government running out of revenues and gold soaring to its highest level close to ever, you can bet the governments are looking at those mines and thinking about they want more of them.
Now, I get this listener question a lot from many of our different listeners. They ask all the time because they are worried about confiscation and governments changing the rules, whether it's mining stocks or physical metal. How difficult is it to store gold and silver outside the United States if you're an American citizen, and how much does it cost?
Right. Well, of course, there's many different places you could store it. I mean, you can store it in Switzerland or London or Hong Kong or Singapore or, of course, the United States. But all of those places, as far as we know, every single one of them is going to charge you a percentage of the bullion value, typically about 0.75% per year, and sometimes it's more. In fact, I've seen some places where it's a lot more, almost double that, and that's a lot of money. I mean, if you're storing $1 million, 1% of that is 10% a year, or $10,000 a year. So that's a lot of money. And if the price of gold doubles, well, then you pay $20,000 a year. If it triples, you pay $30,000. That's where you're going to be almost everywhere. We at Miles Franklin, and I'm not just saying it because it's our program, we have created this fantastic program with Brinks, not a bank, Brinks Security in Montreal, and in the next couple of weeks in Vancouver as well, where people are charged per ounce. We have a contract that's in place up until 2017, I believe, where it's per ounce. So if you have 1,000 ounces, you will simply pay a flat fee per ounce every year, and it doesn't matter what the price is. Right now, our rate for gold is roughly $1 per ounce per month, and it's subject to volume discounts, and silver is 3.5 cents per ounce per month, which is subject to lesser volume discounts. So that's what it costs to store it out of the country. As far as actually doing it, it's easy. In fact, it's easy to just take your metal and mail it up there. We have a process with outside insurers, so no one really knows how much it's worth. We've never lost a package, and it's really easy. In fact, sometimes because you cannot send American Eagles up there because they're not 0.999 fine and they're subject to VAT taxes, we can just swap them out for you to Canadian Maple Leafs. So it's pretty easy to do. All you have to do is give us a call. We'll tell you how. It's just a matter of, if you want to do it.
Sounds very reasonable. Yeah, some of these programs do charge a lot, and there's a lot of options, whether it's Bitgold or so many others. I think if our listeners have the net worth to do so, if they have at least a couple 100,000 or there were 7 or 8 figures, obviously they should have the amount of capital to be able to store metal in at least a couple different countries and to protect themselves just in case like their home country changes the rules or one of the storage countries changes the rules, because I don't think any government can be trusted at this point.
Absolutely not. And again, for most people, you would prefer to keep it at home. I always say kind of 97% of all the gold in the world is held at home by people, but it's only a couple of percent of the actual gold, whereas 3% of the gold's holders, like the central banks and the sovereign funds, they own the majority of the gold, and they, of course, need to store it somewhere. And then there's always a few people in between who, for various reasons, it makes sense for, like if you have a lot of it, or if you're a renter or an expatriate, or you move around a lot, or you simply are too nervous about having it for you, then it makes sense. And if it does, you have to do your due diligence about where you think the best place is. I think if you live in the Western Hemisphere, and for many people even in the East, we haven't found a program that combines all the positive attributes like what we have at our Brinks, Montreal and Vancouver programs.
I have two more questions before I let you go, and then I want to make sure that you talk about your meetings so you can promote them for listeners who are interested. The first one's about the allocated bullion exchange. Do you think this is going to help bring more transparency to the market?
Well, you know what? I'm not sure. I know what you're talking about because it supposedly came online, and I think it's in China. Again, it's all a mosaic. Anytime there's new competition in there for the COMEX and the LBMA, that's good. I don't know much about this. I do know people like Andrew Maguire are involved in it, and they are very high on it. And hey, look, it started immediately after the price went up. Is that why? I don't know. Is it because of the London silver fix last week that caused people, including a bunch of miners, to leave the LBMA and realize there's manipulation? It's a combination of a lot of things. It's certainly a positive step, but I can't judge if it's the step, that it defines what will be going on.
Yeah, I think that's fair. I don't think anything's going to be the silver bullet, no pun intended, that eliminates the manipulation.
Yeah, well, look, I mean, all it comes down to, I've been in this now 14 years, and I started reading GATA 14 years ago, and it's the same. The story's the same now as it is then, except we're far more along the road, which is once the physical demand swamps the lack and the dramatic decline of physical supply, it's all over. And so again, they'll keep manipulating till the last second. But as we are seeing in stock markets, they're losing control. Certainly, they're starting to lose control in gold because it's up at near all-time highs in almost every currency, and it's even rising in U.S. dollars now, albeit still manipulated. So it's going to eventually run out no matter what these guys try. And there's no maybe it is a silver bullet. Maybe one thing actually catalyzes it, and maybe it's just like Ada said. We just wait until there's just no more avenues for these guys to supply physical to the rising demand.
Yeah, I think that's fair. I think it's a wait and see approach. In the meantime, I'll just keep accumulating physical silver and dollar cost averaging, when I can, rather than trying to time the market perfectly. My final question for you has to do with the election coming up in 2016. Do you think any of these specific candidates, like Bernie Sanders or Hillary Clinton or Donald Trump, do you think they're capable of accelerating the collapse or fixing anything? Or are we too far? Is the train, too unstoppable and we're about to go off the cliff?
Yeah, well, we are off the cliff. The way I put it's like Wile E. Coyote's way out there now. He's not coming back. So it doesn't matter. First of all, none of these candidates want to fix anything. They just want to become president. And, Hillary's been part of the problem the whole time, going back to her husband's days. I mean, she's been part of the problem for 20 years now, and Bernie Sanders is just, a communist. Okay, that doesn't make things better. And Donald Trump really is just a dangerous demagogue, in my opinion. I don't think he has any real – it doesn't matter. It doesn't matter who's in. These guys aren't going to fix anything. They just want to be president. And they're just like – Bernanke inherited from Greenspan and made it worse, and Janet Yellen inherited from Bernanke, and she's making it worse. It will be the same for anyone who runs the show because, like you said, we're way out over the cliff now. There's no fixing it. There's nothing to fix, and if you listen carefully to the candidates, there's not one of them talking about fixing anything. They're talking about the other guy is bad, and I want to be president. That's it. And when they get there, the worse things get, the more draconian the solutions they propose will be. At least Hillary Clinton is a career politician who has some kind of filters on her. But, who knows what people like Donald Trump and Bernie Sanders will do because they've got some pretty radical ideas, and it's kind of terrifying.
Yeah, with debt-based fiat money and with the national debt, I mean, these things they're going parabolic. They're a parabolic function. So basically, they're going to keep going until they collapse. So I don't think, a president changing it, whether Bernie Sanders increases taxes on the middle class 30 or 40%, that'll destroy the real economy even faster. So, I mean, it'll accelerate collapse if certain of these politicians win. But I don't think any of them can really stop anything. I don't think there's a Ronald Reagan out there actually, probably even more than Ronald Reagan. He did cut taxes after he raised them, but, there was a Paul Volcker there to do the right thing and buy the U.S. some time.
Well, again, Ronald Reagan didn't do anything great. He's the one who started the whole thing. He's the one who started deficit spending. It was his people that said deficits don't matter. And it was a time when the U.S. had just gotten off the gold standard, so we had a big, gigantic credit card that we could charge up. So he could have done anything he wanted. And what he did was supply side economics, which means deficit spending. So he's the one who got the ball rolling on the money printing. He didn't do anything. And as for Paul Volcker, who, by the way, was there before Reagan was there, it was still Jimmy Carter's time. It would, he was able to raise rates because we had no debt back then. We could raise rates. You look what happens when the Fed raised rates a quarter point from 0 to 0.25%. The whole world fell apart. So there's no will or ability. There was nothing altruistic or brilliant about anyone in the 70s or 80s, and certainly things haven't changed now. The problem is that now the fiat Ponzi scheme is in its final stages, whereas back in the early 80s it had just started. And that's, they were able to mask those problems for 40 years, but here we are at the end game, where you raise interest rates for 0.25%, and even the manipulated stock market goes into free fall. So, again, there's nothing to do except brace yourself and hope, prepare for the worst and hope for the best.
Yeah, and when Janet Yellen and the other people at the Federal Reserve, after they tried this token interest rate increase, they were talking about 4 additional ones. I thought, if they do a couple more, something either in the real economy or in the asset markets is going to totally break. So I didn't think there would be much chance for them to do more than 1 or 2 more, but I don't even think they're going to get to that. Maybe they'll try, but then Wall Street will probably already have been short, and maybe Wall Street wants to make money shorting all these things.
No, they're not raising rates. I mean, the only thing that would cause them to even dream of raising rates is if they could actually get if the economic data was getting better and the stock market was soaring. But the economic data is getting worse and the stock market's falling. And it's falling despite central banks doing easing, like the ECB and the Bank of Japan. So, no, they're not going to raise rates. It was ridiculous that they did it in the first place, and even stupider of them to pretend that they had plans to do it more. And even what they planned to do wasn't much. They were going to raise it to 1% in a full year's time. The average over the last 60 years is like 6%. So they act like that's such a big deal. But no, they're not going to raise rates again. They were stupid to try it the first time, and it backfired on them. And now it's a matter of, how fast they lose control of markets and are forced to go back to zero and negative. I mean, Janet Yellen said the other day, we're looking at negative interest rates. I mean, why would they say that unless they're well along the way of getting ready to do it?
Yeah, I think all these governments are all headed for financial repression. All the major economies are all doing financial repression where they manipulate interest rates lower. And, this is the Keynesian endgame to me because they're running this is an Keynesian academic, Paul Krugman type of wet dream where they start implementing negative interest rates. So it's basically they've run out of schemes except for start charging people to hold their money, try to force people to spend it.
Yeah, which is just going to force people out of financial markets and into gold and silver, and heck, Bitcoin. I mean, anything to get them out of the system. That's what's going to happen.
Well, wrapping things up here, Andy, just want to thank you for your time today. Please tell our listeners where they can find your articles.
Right. Of course, I write every day and do these podcasts. They're all free on milesfranklin.com. And everyone should know that myself and our president and co-founder, Andy Schechtman, have started a nationwide speaking series this year. It's actually not presentations, but all-night Q&A rap sessions. And we just did one in Denver last week, which was wildly successful. And now we have several coming up that you can attend for free. The first one is Friday, February 26th in Minneapolis. The next one is Wednesday, March 16th in Phoenix. And then we're shortly going to be booking a date in April in South Florida. So if you're interested in reading my stuff or signing up for the meetings, just give me a call, 800-822-8080, or email me at ahoffman@milesfranklin.com.
Okay, great. Well, thanks again for your time.
Thank you, Jason.